So today I'm going to be talking a little bit about mortgage eligibility and digital identity. So this talk is part of a collaboration between Atom Bank, Newcastle University, and Durham. So I'm from Newcastle, and I've been working closely with Atom, which is where the majority of the content for this talk comes from. So we're going to start today by introducing eligibility assessment and decisions, what it is, why it's interesting. Then we'll establish the relationship between that and identity, and in particular digital identity. We'll analyze some digital identity techniques, kind of current uses and maybe potential techniques. And finally, we're going to finish by presenting a system architecture with some software, which we think kind of helps to put some of these ideas into practice. So to kick off, we're going to run through what applying for a mortgage looks like in the current state of the UK. So here we have borrower, who's a potential borrower. They want to get a mortgage. They've approached Atom, which is a challenger bank that does provide mortgages. So they're going to provide some information to Atom. Atom's going to think it over for a bit. This costs them a bit of money and takes a bit of time. And then, oh no, they might come to the decision that no, actually, you're not eligible for a mortgage. But borrower is quite keen on getting one, so he's going to try and approach another lender. Here we have lender B, similar thing. Can I have a mortgage? Going to send some information over. They're probably getting a bit frustrated now, having to provide lots of information over and over again. More time, more cost, and unfortunately, same decision. Now, borrower is persistent, so he's going to try again with lender Z. Can I have a mortgage? Similar process. They get very frustrated now. A bit more time, a bit more money, and finally, we get the answer we were looking for. Yes, you are eligible for a mortgage with this lender. So kind of to summarize, now they're quite happy because finally they've got what they wanted. So we're going to summarize kind of what the issues we've seen here are. On the customer side, they often experience very poor user experience. And we'll talk about that in a bit. On the industry side, there's some kind of industry-wide issues with eligibility at the moment. So in the FCA recently published the mortgage market survey in 2019, and they found that 30% of consumers could have gotten a cheaper and almost identical mortgage. And the reason for that is largely because they're trying to avoid the process we just went through, where they applied to multiple lenders and got rejected, which takes a lot of time on their part. So as a result, they tend to be cautious in who they apply to because they want to be sure that they're going to get that yes offer in the first instance. And on the Atom side, this kind of process involves less automation than kind of would be desired. So there's quite a lot of room for improvement here. And as we're going to reveal in the talk, this can largely be attributed to identity, or rather the fact that identity is quite hard. On the consumer's side, they're having to provide lots of the same information over and over, which is why they have poor user experience. On the industry-wide side, generally the issue is that the cost of assessing identity for the purpose of eligibility is quite high. So in our ideal scenario, we would like borrower to kind of have a mortgage. They'd be able to apply to as many lenders as they wish to, all in one go, and they get back a result almost instantly. This would then allow borrower the confidence to apply as many times as they want, and they should get back the best mortgage available for them. So we're going to dive a bit deeper into trying to understand the eligibility assessment, trying to tease out what role identity plays and what we can do to improve it. So we can call eligibility assessment a trusted inference. Now, the inference part just means we take some input data, probably information about the borrower and the property. We run some inference on it, so we'd try and figure out, is this person eligible for this mortgage? And then the result would either be yes, they are, or no, they aren't. The trusted part refers to the fact that we want to make this inference on trusted. And here, trusted means that it's considered correct enough for a particular inference. So this is the idea that the inference here is our context, and identity and trust exist within that specific context. And now we want to figure out, how do we determine what data is trusted? So one way we can understand that is if we understand our identity data as claims. So here's an example of a claim. You have Alice. Alice is making the claim that Alice's income is 40k a year. And here Alice is the subject of the claim. The property is income and the value is 40k a year. We could have somebody else make a similar claim. So here we have Alice's bank is now claiming that Alice's income is actually 30K. And we see that the entity making the claim is almost entirely what we use to determine if we trust it. So for a lender, often we would consider Alice's bank or maybe their employer more trusted than Alice herself. So in practice, a few techniques are used to redirect trust to these more trusted third parties. One of those is the verification of physical or electronic credentials, often in form of documents, and also API connections. And we're going to go through these one by one in a bit more detail. So document verification looks a little bit like this. Borrower is going to ask for a mortgage again. They're going to fill in an application form with some basic information, name, address, etc. They're going to gather up some documents and credentials. They're going to send, this takes quite a lot of effort on their end. Then they're going to send this information over to the lender. And it's going to try to go through the process of manually verifying this evidence. And they're going to look at their lending criteria and try to apply that to the evidence. This takes a lot of time and quite a lot of money, just in terms of the time. And then in the worst case, they might come back with a no. And a lot of that effort would appear to be wasted. So quite obviously, this isn't a very good long-term solution. It's hard to automate, largely because this sort of evidence is not easily machine readable. You could go turn to things like OCR, but that doesn't really solve the problem in a large context. So we're going to move on quite quickly from this to API connections. This has seen a lot of kind of growth recently as quite an attractive option for faster eligibility decisions. So this looks a bit like similar start. I want a mortgage. We're going to fill in the same information. It takes a bit less effort this time, which is nice. Then Atom's going to turn to these API connections, which they've built in. So they might do an electronic ID&V, which is identity and verification. You might try and get a credit report from a credit reference agency. Might try and assess disposable income, land searches, valuation of the property. So this is quite nice. It's quite a bit faster, but the largest downside to this is the cost. Generally, accessing data from each of these API connections has a cost associated with it, either a per request cost or a kind of a monthly kind of subscription-based cost. So all of these cost money. Valuation particularly is the most expensive. And then in the worst case, again, this effort and money would be wasted if you come back with a no, it would seem. So this is already, we can see the cost is a downside, but this issue gets even worse if we switch our perspective and go back to looking at the fact that we have multiple verifiers. So here we see we have the subject, same on the left. We have the service providers and aggregators in the middle, which are those API connections from before, and they store bits of information, which are the kind of greeny circles. And we have the verifier Atom on the right. But we also have more than just Atom who's trying to, whose borrower is interested in. So we have our lender Z again, we have our lender B. And these also have to maintain pretty much the same API connections as Atom did. We have to maintain these, do the integration, quite a lot of effort. Then if borrower asks for a mortgage again, we can see how the cost of accessing this information is actually duplicated across all of these. So we've basically gone through the same effort and the same cost 3 times. And the service providers / aggregators get a large benefit from this because they get to charge 3 times. But the subject, the user, and the verifiers generally kind of lose out from this arrangement. So kind of what did we learn from looking at these approaches? Well, it should be easy to access trusted data as desired by the verifier. So they should have flexibility to define what they consider trusted on their own terms. We want access of the data to be controlled by user and portable. And that should have the effect of keeping costs low, because generally it's in the user's interest to share this information because they do want a mortgage. And thirdly, we want privacy for the user. So generally that means lots of things, but protection against correlation, data breaches, minimal disclosure, all of those properties. So we're going to put this maybe into practice and see what approach to identity we could take from this. And generally, you might call this a user-centric model of identity. So in such a model, you take borrower over the course of their day-to-day life. They're going to interact with these service providers from before. But this time, when they interact with them, the data is not just going to get stored with the service provider. It's going to get aggregated somewhere closer to borrower in borrower's wallet. It should be under borrower's control. So we call this process issuance. So they're going to interact with various service providers. All this data is going to get aggregated in their wallet over time. Call this aggregation. And we have the verifier on the right, similar as before. And now the verifier has a nice, easier job because they only need to go to one place. They just need to go to Boromir, and all of the relevant information should be there already. And we call this, of course, verification. And then similarly, when we've got more than one verifier, the problem's pretty straightforward from them. They can access the same information over and over. So this has a nice benefit of it on the user side, being hard to correlate. In the middle, it's easy for the user to control this information. And then on the right, it should be easy and cheap to verify, naturally due to the portability we've gained. And one of the kind of fast-growing implementations of this idea that we're very excited about is verifiable credentials. So verifiable credentials are essentially a superpowered digitally native credential. So similar to a credential as you're familiar with a passport, you move that into the digital era, and you provide lots of cryptographic properties like tamper-proof, tamper evidence, and verifiability, etc. So verifiable credentials is an open standard, which is an important property, and there's a whole ecosystem of standards and implementations around it, where 3Cs is in the middle. So additional to this, for maximum portability, we'd want some industry standardization of credential schemas as well. So within the kind of lending or financial services industry, if you could standardize some of the schemas for that, that would allow the user even more portability to reuse similar credentials with different lenders, or the same credential with different lenders. There are other approaches to achieving the user kind of centricity that we want. For example, open banking has aspects of user centricity, which we've seen some benefit arise from that in the fintech space. There's some limitations of that approach in that it's not really a generalized identity solution, and it's very limited to a small kind of financial services niche. Whereas to get the full benefit, we should be able to verify lots of different information from different industries, and we don't want to exclude any, which is what makes this one a good approach. There are others, but this one has some nice features. So one important aspect of the kind of technology or standards we're choosing is that the main benefit from adopting them depends on there being a large amount of adoption for them. So the more verifiers, the more lenders that a user could reuse their credentials with, the better. But what tends to be the barrier to this is adoption itself. Nobody really wants to make the first move. Who's going to get the benefit? It's kind of a tricky situation, which I've found in industry myself. So what we want to try and do is break that deadlock, and a lot of our system is kind of built to try and achieve it. We've gathered some requirements kind of through this journey of what we want our system to be able to do. So we want it to be able to execute trusted inferences. It should be expert-centric, which is a nice one. It should allow domain experts, for example, in credit risk, to contribute to the definition of those trusted inferences. And that's important for the verifiers and the kind of industry aspect. User-centric, we want to encourage user control of portability of data used in the inferences. So this is to minimize the cost of obtaining the data. And then often this conflicts with the last one, which is the practical requirement. We want it to be able to fulfill the common inference needs of industry right now, rather than just in the future. But we also want to support the kind of better models of identity, which we hope will arise. So we kind of have two main features of the system, which kind of work to achieve this, which are a bit unique. So one of them is we have pluggable data sources. So the idea is that you can plug in different sources of different types into the system. So you could plug in currently your more manual verification kind of approaches. You could plug in your API connection approaches. And then you could also plug in your verifiable credentials interface, or what kind of the next gen version of identity you want could be plugged in as desired. And then the key thing we do is we model all of that data, regardless of where it comes from, as claims, which are grouped into credentials. Well, specifically their credential queries. And then this provides us with a consistent interface with which the rest of the system can interact. And that helps us in achieving the second cool thing we do, which is we have this concept of an inference strategy. So an inference strategy it represents an executable and repeatable representation of a trusted inference, as we defined it before. So it's made up of two main components: the trusted data requirements. So that defines what data we want the inference to act on in terms of the semantics, what it is, the properties like income and name. And correctness defines what we consider correct or trusted for those pieces of information or for those claims, which is often how we view them. So we would do that by having likely an acceptable set of issuers which we consider trusted for this specific inference and for those specific claims. And then we have logic, which is what gets applied to the data to obtain a result. And then the system is all built around being able to execute these strategies. So we also have a user interface, which we kind of built on this to be able to create inference strategies. That has two main components. One, you can use it to define logic, and we do that. We define logic in terms of a DMN model, which stands for decision model and notation. And that's an open standard published by the Object Management Group. It gives us a lot of great features like visualization, easy editing, so we just kind of take advantage of that. And then in the trusted data requirements bit, we provide an editor so you can create these visually. So this presents the schema of the claims which are available visually and like a tree representation, and then you can select which claims are required by your specific inference. You should also be able to select how it's considered trusted, so what issues are acceptable. There's some ability to map that data into the correct form as it's required by the logic, and then that should basically give you everything you need to define an inference strategy. So to summarize, we've seen how considerable improvements can be made with the right approach to digital identity, and we've talked a bit about what that should look like, what properties it should have. We've identified that obviously adoption is needed, but how to make it happen isn't necessarily obvious. And it shouldn't be limited to just a software approach, which is why events like this are very important to get a multidisciplinary view on how to make it accessible, etc. And then thirdly, we've seen how the software and system design aspect can be is important and can be used to take advantage of this technology, and ideally to aid in the transition from where identity is now to maybe where we want it to be in the future. Thank you very much. Any questions?
Excellent, thank you, Edward. Very interesting talk. We've gone into your question time, but just doesn't seem to be any questions. I'll do a quick one for you though. You don't mention mortgage brokers. I mean, whereabouts in the story will they fit in? Yeah,
so mortgage brokers, yeah, I cut them out for brevity intentionally, but they act essentially as the consumer. So they should be looking after the consumer's interests, and they're on that kind of side of the equation. So assuming that they're doing their job correctly, we should be able to substitute them for the user. It shouldn't really make much difference.
Okay, brilliant. Thanks very much. Well, thanks again, Edward. Many thanks.
You're welcome. Thanks for having me.